Good morning, everyone. It is Monday, August 16th. We are in the middle of August. We've got a bit of, well, the markets aren't so quiet today. We've actually got some things moving along. This is Nadex Morning Analysis. I am Todd Rich with Nadex. With me from Keep Trading Simple, Brian Caprice. Before Brian and I jump into the hot spots on the markets today, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So, what are we seeing in the markets today? We're seeing a couple of things. First, you're going to notice oil lower. So that is actually one of the hot spots. We will be definitely taking a look at technical levels in oil. Why is oil lower? Why are we seeing this weakness? Mostly because of demand. China retail sales, their economics numbers coming out, they are struggling a bit. So you've got China's economy struggling. U.S. economic numbers. We had the Michigan consumer sentiment came out on Friday, the lowest reporting on that number in a decade. The recovery is, as we're looking for a global recovery, the Delta variant certainly slowing things down. So as we see the economies not firing at full steam, actually backing up a little bit, demand is going to be down, demand down, price of oil down. We're also going to take a look at that across the equities. We're seeing equities all in the red this morning, not quite 0.5%, somewhere between a third of a percent, 0.5%. So we're looking at a weak opening on U.S. equities. With that, I want to flip it over to Brian. Brian, let's take a look and we can scan through some of the numbers and stories just to see what's going on.
Yeah. So last night we had some Chinese news that came out, as well as some other kind of COVID-based news, I would say. Right now, as far as kind of where the globe is standing as far as currencies go, everything's kind of mixed. The only thing that is outstanding right now is the Aussie. We're seeing weakness. That's all coming from basically the news last night that Melbourne is locking down. Again, they're going to extend the lockdown for 2 weeks. They're going to impose curfews from 9. Again, the reason why is everybody knows kind of where our first spreading came from. It was the bars, right? People going out to bars. But they're trying to kind of put a curb on that. So they'll have curfews imposed from 9 p.m. to 5 a.m. And I was laughing. Todd and I were just laughing a little while ago, guys, that, you got to understand, Australia is doing things a little bit differently. They're trying to be super, super, super proactive. Last week when they started the lockdowns in some of these areas, they didn't have any confirmed cases, but they had contact traced 2 people that went to that area and left, but they were still locking it down just to make sure it didn't happen. As Todd found earlier, Melbourne's locking down because there was 22 cases of COVID.
Count them
22.
all.
Not
I can count them on my
2,200.
fingers and toes.
Yeah, not 2,200, but 22.
22.
So again, they're being like super, super, aggressive with it. And again, as we see their economy kind of push through, even though they're locking down, they're still kind of chugging through with their numbers. And then tonight we have their monetary policy meeting notes. So as you guys know, New Zealand is expected this week to actually raise their interest rates. They're doing it a little bit different than Australia. But with Australia going kind of super vigilant in kind of just keeping the spread from actually happening, again, if they're chugging through, the second they say, okay, we don't have to worry about these things, again, their economy is in this recovery phase without COVID even really kind of putting like a big dent in them. It could be a very interesting trade setup tonight because, again, they tend to follow their neighbors. Their neighbors are raising interest rates. Yeah, they're locking down. But if they say, yeah, but our economy's rolling, even though we are locked down right now, we've managed how to work this through. Again, any type of hawkish tone tonight could be a big bounce. And again, after a big push down, again, that's setting up perfectly for news tonight. So 9:30 p.m. tonight may be an Australian, decent Australian trade to reverse what we've seen in. The other thing that, Todd mentioned is China. Retail sales. And again, we always have to take Chinese numbers with a grain of salt, whether they're true or not true. The consensus is most of them are not exact. They give us kind of ballparks of where they, expect them to be, that they have a lot more riding on the market. Their estimates were lower. So it's, their estimate was at 10.9 from the, that's what the forecast was, right? That's not China's forecast, but the market's forecast.
Right.
And China says they came in at 8.5. Fixed investments, yeah, and then as well as industrial output rises. And again, it's still rising. It's not shrinking, so it's kind of where it's like, yeah, we missed the estimate. And remember, the reality may be somewhere, the truth may be somewhere in the middle of these two. We don't exactly know. There's no kind of double checking or triple checking of these, unfortunately. And again, could they change next month with a revision? Yeah, absolutely. So it is lower than expected, but all of them are actually positive. They are growing over the year. So even though we've went through COVID now, retail sales is up 8.5% year over year. So it is getting better for them, just not as much as what the market expected. And because of it, we're seeing for the most part, you're seeing, the dollar be affected by it a little bit. We're seeing right now, all the indices are down, and again, global growth. But the big story is going to be oil. And again, when you miss, when you're missing retail sales and you're showing growth, and people hear things like lockdowns, first thing you got to do is go, well, locking down people that can't go out and drive, less demand for oil. And again, oil has responded. If you look from really, I mean, the open actually kind of pushed it up a little bit first and grabbed an area of sellers sitting right there. Pretty easy to see them. But since that time, actually since its peak, it's down about $1.83. So it's already moved one daily ATR worth of movement in the European session. Friday, you can see we actually had that push up and push back down again. Actually, that was actually on the 13th, and then actually on the 15th over actually here. Yeah, is where we ended. Now we're kind of seeing the same thing. And remember, we've had this down, up, down, up, down, up, down. Now we've had the big down and the U.S. traders stepping online. What we've heard this morning from U.S.-based news, which again could lead us to an area where we're getting ready to reverse back up again, is things like this, where the Fed is weighing ending, not starting the taper, but ending the asset buying by mid-2022. Right now, they're still going to start tapering third quarter or fourth quarter this year because we've kind of recovered to the extent where, hey, listen, we got to start talking about taper. But again, that was something that they mentioned earlier. They could end asset buying by mid 2022, which again opens us up for that interest rate change and everything else. So kind of rolling through there. I would say right now the biggest thing I'd be looking for in oil is we know we have areas of buyers lower. We know we have some buyers sitting over here too, where we had a nice little kind of push up and pull back, and that was around the 65.68 to 65.43 area. Right now we're at the 66.50 area, so it's got $1 more to go. But right now, with where we're basing, with the U.S. trader stepping online, we hear anything positive this morning about good earnings or anything else, this gives us the potential to really kind of roll in and kind of retrace back up again. Because like I said, whenever you see more than $1, more than a daily ATR worth of movement in one session, we tend to have that profit taking and everything in the other direction. So right now, I would say on the 30-minute, it's not set up for a buy yet. I'd like to see us kind of put in again, I've mentioned this before, the color changes. If I can see a green candle, a red pullback that doesn't go as low as the low, and then a green close above in that 3-candle combination, something that kind of looks like this right here, where you have a green, a red, and a green, that will be a signal for me to go long this one. And again, take it probably back up in the 67.50-ish range. Again, 68, I would say, be a little bit cautious about that one because that halted all the buys this morning, and that was really the turning point for oil. But again, Monday, we'll see. Like I said, if you follow the pattern, because this pattern has happened here, 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 here again, here again, here again. I mean, here it didn't. Here was a down and a down, so it's not like it's anything 100% guaranteed. But there was a retrace in that one before it turned and rolled in the same session. So again, the way that oil works, again, there's another big example here. There tends to be reversals. The question is, where's the bottom being put in and where's the buying opportunity? So, if you can catch a call spread today, those aren't bad. If you can catch a knockout down here, those are all things where if you take
that's
limited
around
risk.
the 65.50-ish level.
Mm-hmm. Yeah, 65.50 is an area where we do have buyers stepping in. That could be a decent area as well.
So you know what? In fact, let me just kind of do this. I mean, let's just take a peek. I'm not even sure what we've got, but let's just take a quick look over here at some knockouts. Do we have any knockouts down there? We're going to jump over to oil. Let's just bring up any knockout. And do we have? There is 1, 2, 3, 4. This there. It's a bit of ways. Below it does give you 25 cents plus of some wiggle room. Hold on, around 65.50. Hold on, I need to move that. There we go. There is a knockout in there that if it, again, if this then that, something to consider and look at, right? So well, we'll see as the U.S. trader steps in if that opportunity presents itself. Might be a little bit early. On the call spread side, we're going to jump over to the commodities. Let's take a look at what we've got going on in crude oil, and there actually are there's there actually is a call spread with 65.50 as the lower floor. Now remember, with the call spread, if you were to go along a call spread and it were down here, if it were to touch the floor of 65.50, you're not knocked out. So depending upon what's going on, it's something to take a look at. Check out those knockouts and those call spreads in oil. If oil does kind of pull back down to a place where we think, that there's, you know, there's potential for some support down there and potential reversal. So, and yeah, and I know we need some weekly call spreads. We're working on it. I know, I know, I know, I
Yes, would have
know,
been
I
perfect
know.
for a weekly call spread.
I know, I know, I know, I know, I know. All right. Let's take a quick peek over at some of the equities. Let's just do a quick little roundup of what's going on in the equities because we are, as I bring up, I just wanted to get a quick peek of it. Yeah, we're looking lower. Everything's looking between
Mhm.
0.3, 0.4% down. So we are definitely having a weak open on the equity front.
Yeah, and I think that could be expected. I mean, there was the initial push up right at the 3 o'clock European window, but again, everybody can see the Chinese data, can see the lockdowns, and kind of can see what's coming. And again, you can see that we've had many lower highs put in. Again, we're still approximately in that same striking distance. We're only 3 points from the 44.50. We haven't really left the area, but again, there'll be people out there that are channel drawers, and again, this is a very easy kind of channel to start drawing to the downside. People see this and they say, "Oh, China's bad. We're locking down Afghanistan." These are all kind of different contributing factors in, and like I said, you can see that it keeps balancing and keeps basing off of the 44.50, and it's kind of an equilibrium point. But as of right now, if you're drawing this one, channel wise, it's not difficult to see, and having the required number of touches and everything, that this looks like it's going to go lower. And if we were to look to see where there's big momentum, it doesn't look like there's really a lot of great. Let's just do. I was looking for the arrow, and I can't find it. We really don't have a whole lot of buyers coming in till about this area right here, till about right there, and that's coming in at what 44.32 ish, right? So that's about what do we have? 15 points to the downside, almost 20 points, a little bit, give or take if we get back up to that 44.50. So that's the last time we really had any true buyers come in. And you can see that looks like it's a big drop to the downside. So I'd say right now, ES is not looking great. If you taking a quick look at NQ, it's basically the same thing. Not much difference. This one's a little bit farther away from any of the equilibrium points, but you can see, overall you have a piece there. And again, we slice through a little bit in the morning hours, and kind of the same thing. So still kind of trending. Buyers stepping in. I'll just do horizontals. Buyers stepping in that area. Let's change this so it doesn't look like
But
it's a.
but those lower highs all the way down definitely gets
Yep. And again, same story. And remember, NQ is a little bit more insulated from COVID because of obviously technology-based items. YM, kind of the same thing. There's our fib levels from last week. Let's pull those all off. That one went through. We're good there. Yeah, right now I'd say this is kind of the same area. And again, here's an area that we had buyers in before. Again, we've hit, but now we've hit our required number. At this point, if you see any stabilization, this one is also set up more for a short position. To the downside, question is, can we get our 1 to 3 in? It's close. 1 to 3 is sitting right there. That's where the target would be. So yeah, it's pretty close. And again, if we get a little bit like a solid basing in here, that could give us our new established level of risk. But the YM also looks like it wants to go down again. These lower lows here, and again, the same type of channel draw from up top, you can see is there. And then even the Russell, and again, that one tends to be a little bit more volatile. Right now, again, we've based off that level. We've got a couple bases here, but this one is a little sloppier. I would say the next decent, like clean buying level is probably down here. And again, we got a ways to run on that one. We're looking for this. We're looking for the pullback, and it did. It pulled back. It missed it before it continued to go lower. So we'll take that off. We did not get the pullback we wanted. Yeah, I would say that this one is a little bit more consolidated. We'll see once the open happens where this one goes. This one is down the most right now. It says it's down 0.6. But I think this 2184 is a decent level. Again, it's respected it here. It's been hit twice, but both times it had an immediate. I mean, this was a very quick in response back. So um, I would say that's the only buy I have for any of the indices right now is if that comes down and goes. And even then, I think I'd like to take I'd like to take a confirmation bounce off of it.
Yep.
Um, I would
So
say today,
we'll
all
have to
the
wait and see
sentiment,
what
all the news is all negative today. So,
we'll have to
um,
see what they do. Yeah, how people interpret it and
yeah,
what happens on the open. So we'll
yeah.
have to see how things go in
And,
30
and
minutes
gold and silver
once
we talk about, and those are doing nothing.
and nothing.
gold,
Yeah.
gold is basically just flatlined here. Silver's down a little bit, but all it's pushed down to the European session, it's pulling right back up again. So, really, the metals are really not doing much, and they're both going down, simple levels.
Yeah.
So
Well,
it's kind of one of those things.
gold.
Aussie is the big news, right? I mean, Aussie is the big mover of the morning. So, and it's actually approaching levels where we could have buyers stepping in both cases. So,
Yeah. With gold, it was just it finally climbed out of that hole from that flash crash of last week, a week ago. So,
mhm,
um,
yep, there's gold.
so all right. Well, with that, any questions for Nadex, please email us customer service at nadex.com. Any questions for Brian? You can certainly hit him up at support at keeptradingsimple.com. By the way, I don't know if anyone's. I've always kind of put this slide up there. If you're up for it and you wanted to go to Trustpilot and give us a review over at Nadex, certainly love if you did that as well. I never really mention it, but it's up there. And just a quick recap. Boy, my mouse is super hyperactive today. Yeah, what are we talking about? Oil, definitely seeing some weakness. Chinese economy, U.S. economy, Australia putting in some lockdowns, just showing some weakness on the demand front. Price of oil coming down, and then equities all looking to open slightly lower as we wait and see how people are going to digest some of the news, particularly with what's coming out where the Fed not looking to start the taper, but potentially end the taper a year from now, setting them up for a potential increase in interest rates. So we'll have to see how that all plays out. We will catch you again tomorrow morning, and then Brian also does the full blown. Um, there's also the full blown session tomorrow morning, tomorrow afternoon, where Brian will do a rundown of everything. With that, want to wish everyone good luck in the markets. We will catch you again tomorrow morning. Thanks, everyone.